You're on.
Hello, everybody. This is Pat Borowski. I'm the district governor nominee for Rotary District 7610. And I'm so glad to be with you and, more importantly, be able to bring you this presentation by David Hincapie, who is a U.S. Small Business Administration Economic Development Specialist. And thank you, David, for being with us. We really appreciate you being able to share updated information with everybody.
I'm very happy to do it.
Thank you. Well, as everybody knows, the majority of our Rotarian members are small to mid-sized business owners. And furthermore, they have very deep reach in the communities to the small and mid-sized business owner area. And I know that there has been, this has been a very swift benefit, or I should say series of benefits that are being rolled out to small business. But what are some of the things we wanted to kind of talk a little bit about? How do small business people prep to access these benefits before they get online? And what kinds of things should they be aware of that really are the amount of volume, the issues, things of that nature before you do your presentation?
Okay, so what do they need to do ahead of time?
Yes, right.
Well, because these are, all right, so both programs are loan programs, and so they're necessarily going to ask for financial information. So the best thing is just to get all your paperwork together that you would get together for any kind of loan. It's that simple. Right? Okay. Anything you would do for a loan with a bank, or if it's a direct loan from the SBA, those are unusual. The disaster loans are the only ones. Just get your financial stuff in order: taxes, payroll, your income statements, balance sheets, anything like that you're going to need. You should have it, QuickBooks or whatever accounting program you use.
Okay.
That's the first thing.
Mm-hmm. And then also, they really need, I think, because so many changes are happening, to really be connected to your resources constantly, to expect updates.
Yes.
Things may change. So there's a lot of decision makers involved in this. You might talk about those different levels just quickly.
Right. Well, okay. So an immediate way of staying in touch with the Washington Metro Area District Office is just, and I'll have this in the presentation and the slides later, but if you go to sba.gov/updates, and in that you put in your zip code, you put in your email address, and then you're going to get updates from the Metro District Office. If you don't put in your zip code, you'll get updates from nationally. And so this way you can stay immediately connected with anything. Now, that's not going to be just about COVID-19. It'll be about other stuff too, but you'll get the news directly there about COVID-19, any news releases, any changes to programs, things like that the public is going to be informed about. It's going to go through there. And you're going to get it almost as fast as we get it. We get it about an hour before the public gets it through those channels, because we get it directly from our public affairs specialist, who's the one who puts it out through those channels. So you're getting it almost in real time.
Right.
The other thing is, if you go to the SBA websites for the loan programs, and we're going to talk about two of them today, just keep checking them, bookmark them, go check and see if there's anything new, because there have been things added to it in the last week already, changes. So that's the other way to stay informed.
Right. And that'll work for all of our listeners, no matter what state they're in. They will be able to put their code in and their regional office will show.
Yes. Yeah.
Correct.
We have, so the SBA has 68 district offices throughout the country. Most states have one district office, and then they might have a secondary, main district office, and then a secondary or tertiary one. So for example, Massachusetts has the main district office in Boston, then they have one in Springfield. The larger states, California, Texas, New York, they have multiple district offices, but every state has at least one district office. So
Okay.
Put in your zip code, and that's the one you're going to be connected to, and that's your point of contact for SBA information. district offices have three kinds of specialists. They have economic development specialists like me, they have lender relations specialists, and they have business opportunity specialists who work in the federal contracting programs.
Right.
So ours is the biggest one for federal contracting. We have more BOSs than any other. Another one in another state might not have that many. For obvious reasons, we have a lot of BOSs here. But those are the people you're going to connect to in the field. We call the district offices field offices. So in the field, those are your points of contact with the SBA, the lender relations specialist, economic development specialist, and business opportunity specialist. Every district office also has its own webpage. You just do a Google search. So if you're in Cleveland, you do Cleveland SBA district office or Ohio SBA district office. You'll get a webpage. It'll have a directory in a PDF. You can download it. It's got everybody's phone numbers and emails. We're actually rather easy to find.
Right. So really right now, the economic development specialists such as yourselves and the lender specialists are going to be their two biggest partners for a lot of these programs.
Right, for a lot of this. Unless they're a federal contractor, in which case your BOS, whoever is you're working with already, if you're in the 8A program, then that's the person you're going to be talking to the most.
And my last question, so we can get going with all your great information, is number one, what is kind of the size definition under these benefits of a small business owner? That's number one. And number two, you did talk about contractors. So my question there is, are self-employed contractors covered with any of these benefits?
Yes, independent contractors and self-employed or sole proprietors, they're covered with these benefits. They're eligible for both programs. There are restrictions regarding it because the programs are slightly different, but I'll get into that here. Okay,
great. Well, David, without further ado, I hand the program over to you, and I really look forward to all this information. Thank you.
All right. So I'm going to share the screen here, and we can get to this presentation. I'll turn it into a slideshow. And we'll get going. All right. So this is about coping with COVID-19. Here's some financial tools and resources to help small businesses. We're going to talk about 7 things here. This is what we're going to talk about here. Loan payment deferrals to augment cash flow, the CARES Act, that's the one everybody wants to know about, Paycheck Protection Program, the Economic Injury Disaster Loan Program, which has existed for years, long before the PPP, which is only 10 or 11 days old.
Right.
The CARES Act also has SBA debt relief. There's SBA Express Bridge loans. There's loan application support. And then here is some entrepreneurial mentoring and coaching support for smaller businesses who would like some support in that way. First thing, using loan payments, deferments to augment cash flow. Obviously, if you don't have to make a loan payment, you keep more cash, and that can help you keep the business solvent while revenues are down for whatever reason, whether you're shut down or just business has slowed down. So the federal and state banking regulatory agencies have issued a joint letter to financial institutions recommending they work with borrowers to offer loan modifications. The reason the regulators have done this is because usually banks don't want to do this, and they especially don't want to do this in high numbers, because when they do a loan modification and stop taking payments on the loan to help whoever the borrower is, the loan is called being in non-accrual status, meaning it starts looking like a bad loan. And the lender or the bank, they can get penalized by their regulators. So what the regulators have said, look, if you do this because of this widespread emergency, you're not going to be penalized. Also, if you do deferments on the payments, it won't impact the borrower's credit score. So it doesn't affect either one of them with the regulators or with their credit score. The borrower's credit score will not be negatively affected by this.
That's great.
So that's one thing that could help you in your cash flow. If you can get a loan modification, get deferments on the payments for 6 months or 5 months or whatever you can get from your borrower, that's going to help you. Now, existing SBA loans. If you already have a 7A, a 504, or a micro loan, that's an SBA loan, they can be deferred up to 6 months. So this is something that SBA lenders have had the power to do always. This is just something they have the power to do. They can defer payments for up to 6 months. Naturally, they don't do this all the time. They do this only in extreme circumstances, and I think these are extreme circumstances. If you already have an SBA disaster assistance loan from before, and as I understand it, this recording is going to go out to a much larger group than just the DMV here.
Correct.
A lot of people here don't know about the disaster assistance loan program because we don't have the sort of disasters that people have. We don't have floods and hurricanes and fires and earthquakes and all that. But you might have some members who have an existing disaster loan. If they're in the Southeast, for instance, maybe a hurricane, the SBA is automatically deferring payments on all outstanding disaster loans until December 31st, 2020. Because disaster loans are direct loans from the SBA, we can do that unilaterally. We're just doing it.
Right.
Non-SBA business loans, as I talked before, as I said before in the previous slide, talk to the lender, see if you can get a modification. So here's the big thing, the Paycheck Protection Program. That's where you go find out about it, www.sba.gov/PPP. These are not direct loans from the SBA. It's different from the EIDL. The loans will be processed through banks and financial institutions. We're giving the lenders a 100% loan guarantee, so they don't have to worry about it. They're not on the hook for it. Existing SBA lenders will provide these loans. These are the lenders that we call preferred lending partners. They already do 7A and 504 loans and microloans. We'll provide these loans, and new lenders are currently being added. So we have a streamlined process to add new lenders who want to do these PPP loans. Now, lenders will not charge loan fees for these PPP loans. Normally, SBA guaranteed loans do have fees. There's no fees for them here. So what are the details of it, or who's eligible? Small businesses. Now, small business is generally defined as under 500 employees, but you have to meet the SBA size standards. And as it happens, the SBA size standards are not just in terms of numbers of employees. For some industries, for some sectors, it's by revenue. And those sectors are classified under the North American Industry Classification System, which many of your business owners maybe never have thought of. Right?
Right.
Government contractors know about this because that's how the government hands out contracts according to these NAICS codes. But the the North American Industry Classification System, gives a 6-digit code, 6-digit number for every little sector and subsector and sub-subsector, right? So for each one of those sectors, the SBA has a size standard. The vast majority, it's under 500 employees. Some of them, it's by revenue.
Right.
Okay, so as long as you're a small business under one of those standards, you qualify, you're eligible. Nonprofits of any size, including religious organizations, veterans organizations, and tribal concerns may apply. Effective April 10, 2020, sole proprietors and self-employed individuals and independent contractors are also eligible. If the applicant is a business, they have to have fewer than 500, as I mentioned, using the size standards. Now, the loan amount, up to $10 million, reflecting 2 months of your average monthly payroll costs from the last year, plus additional 25%. Let me say it again in a simpler way. We're going to see what your average payroll cost was for 12 months before the emergency.
Right.
Before the emergency, before February 15, 2020. What's your average payroll costs? And then the loan will be for 2.5 months. Right? Okay. Or 2.25 months, sorry.
David, can
Yes.
I ask you a question right here?
Yes.
Is there any appreciation for seasonal businesses?
Yes.
Oh, thank you. Okay.
Yes. There is actually a Q&A that came out late last night.
Okay.
From the Treasury, and it talks about it here. And then, you know what I'll do is I'll just come back to the question here. I'm going to keep talking, and then when I get to it, when I find
Oh,
it,
yeah,
I'm
that's
going
fine.
interest rate.
Your answer, yes, and that there is a
Yeah.
resource is sufficient for now. Yes. Go ahead.
Interest rate is 1%. Loan forgiveness. The loan is fully forgiven if 75% or more of the loan amount is used to cover payroll expenses and staff levels are maintained. If you don't dismiss anyone, release anyone, fire anyone, or lay off anyone, just keep everybody on the books. For the 8 weeks after the loan is approved, the loan is, and you use 75% or more of the money for payroll and payroll costs, I'll explain what that means, then the loan is completely forgiven. There are no loan fees. The use of funds is what I mentioned, payroll costs and payroll, including benefits, interest on mortgage, rent, and utilities. You can also use it for county and state payroll taxes, but not federal. Collateral, none required, no personal guarantees needed. The maturity is 2 years, no payment required for the first 6 months, and no prepayment penalty. Now, the payroll costs refers to family, medical leave, sick leave. Let me go back here. Family, medical leave, sick leave, wages, salaries, commissions, cash tips. Those are the payroll costs. Also, those payroll taxes from state, county and local, county and state. The mortgage, rent, and utilities do not count as payroll costs. You can use it for that, but make sure that's not more than 25%.
Right.
Because otherwise you don't get the forgiveness. Okay, so next thing here, you can apply through any existing SBA lender. So your bank is probably an SBA lender. Some small community banks and federal credit unions are not SBA 7A lenders, but most of them are. If yours already is, you can apply through them. Now, you're going to encounter a bottleneck. They are really overwhelmed. Some of them don't even have an application online yet. What they have is they're taking names and they're taking information, and you're in a queue. And when they get to you in the queue, they're going to do an application, or when they get their website up, they're going to do it. I know some of them have started and stopped because their website crashed.
Right.
That's who you apply through. And I know there are bottlenecks and I know there are problems, but that's because they're overwhelmed by the numbers.
Okay.
Okay. If your institution is not, if your bank is not currently a PPP lender, you can call them up and ask them if they intend to be one. Now, here's a problem. There are some businesses who are banking with a small federal credit union or a small community bank, and the community bank or the credit union doesn't want to participate in the program, and they're not obligated to. This is a problem. We have been reporting this up the chain, all the district offices. This has been a problem in every single district office. We've been reporting it up. We don't know what the solution is yet. So if you're in that situation, believe me, we have reported it and they have heard it for 3 or 4 days now. Every day we're saying the same thing, reporting it up to our local district directors, who then reported immediately to the senior leadership of the SBA. And I presume they are working on some problem, because if your institution doesn't want to be one, a PPP lender,
Right.
and the other lenders won't do it for you because you're not their customer, well, this is not fair and you should have access to it somehow. They're working on it somehow. And we'll let you know as soon as we find out.
And David, on that point, in order for a lender even to be participating in this program, they must be an FDIC insured institution, correct?
Right, federally insured depository institution, federally insured credit union, or farm credit system institution.
Right, because there has, over the last 10 years, been an uptick in financial institutions that are not necessarily FDIC participants. So
right.
It is important for everyone, all small businesses, to understand that and find that out.
Right, right. Okay, so all loans offer the same terms regardless of lender or borrower. The terms don't change. It's the same loan for absolutely everyone. The only thing that changes is the amount of the loan, because it's based on your payroll.
Right.
Okay, now I'm going to go back here because there's going to be a question. There are businesses that don't have employees, but they have a lot of independent contractors they pay. Do
Correct.
Contractors count as payroll? No. It's very explicit in the interim final rule. And that interim final rule is right there on our website on the PPP section that I gave you, sba.gov/PPP. At the bottom in the section called, and I'll show you the webpage, called Lender Forms and Guidance. You can click on the interim final rule, download it, go look at it yourself there. It's only 31 pages long. Now, I believe that is listed on page 15. I've been reading this thing for a couple of days now. Yep, right there, right at the top of 15. Do independent contractors count as employees for purposes of loan forgiveness? No. So, the independent contractors themselves, however, can qualify for the Economic Injury Disaster Loan, which is the next one I'm going to talk about.
Okay.
If the independent contractors have employees, and I mean regular employees, W-2, wage or salary employees, or commission, but
Not
W-2 employees. Not 99, yeah. No. They have to be regular W-2. So I can be an independent contractor, and let's say I have a 20-hour-a-week administrative assistant who I pay.
Right.
I can apply for the PPP for my payroll, which is my 20-hour-a-week assistant.
Okay.
Because that's a regular employee. I cannot apply for the PPP for myself, paying myself. Now, however, if let's say I'm a sole proprietor.
Right.
Most sole proprietors don't pay themselves a wage as a W-2 employee. Some do.
Right.
If you are a sole proprietor and you pay yourself a wage as a W-2 employee, meaning you're doing the payroll taxes and FICA and everything like that, yes, you can apply for the PPP for yourself on the payroll. But if you're not doing that, you can't, because you're not on payroll.
Right.
Now, this is going to hit a lot of people hard. I talked to 4 people yesterday who were telling me, why don't I qualify? I pay taxes like everybody else. This is my income, just like the wage or salary employee, that's their income, is protecting them. And I said, if it were up to me, everyone would be covered, but it's not. I'm just an EDS at a district office. I'm not in the Congress. So anyway, be attentive to that, right? That detail there. All right, let's go to the EIDL. Economic Injury Disaster Loan. This is where you find the application, www.disasterloan.sba.gov. In fact, don't use the www. It's just disasterloan.sba.gov. That takes you directly to the application.
Okay.
I'm going to describe it here now, the disaster loan program. All right. As I said before, this has been around for years.
Right.
And you will notice that you can use this loan for payroll. This existed before PPP.
Correct.
And I'm going to explain how those two things connect. So it's for small businesses that meet the size standard, as I mentioned before. It's also for self-employed individuals, sole proprietors, cooperatives of any kind, independent contractors, and private nonprofit organizations, regardless of size, including religious organizations. Private nonprofit means not a government nonprofit. So a state hospital is the nonprofit, but it's a government nonprofit. A state college is a nonprofit, but it's a government nonprofit. This is for private nonprofits, regardless of size. So here are the ones that are ineligible. Philanthropic or educational foundations that rely on donations to carry out their programs. Gambling concerns. Businesses that derive more than 1/3 of their annual gross revenue from legal gambling activities. Even if it's legal gambling activities, if more than 1/3 of the gross revenue is from legal gambling, they do not qualify. They're not eligible for this. How much can you borrow?
David, let me have a question on that one. If you are an organization that does a charitable raffle that is handled, where you have to be licensed by the State Gaming Commission, but there is a specific section for charitable raffles, they wouldn't be able to apply for this, right?
I don't know. An exception that tests the rule. We keep finding them. I can find out for you.
Okay, thank you.
Yeah. Send me an email with the specifics, as many specifics as you can, and then I'll
That would be important to our audience. Thank you. I'll get that.
So let's see here. How much can you borrow? All right. So right now, borrowers can qualify for loan amounts of up to $15,000, of which up to $10,000 or $1,000 per full-time or part-time employee is a loan advance. So if you have employees, you can get $1,000 per full-time or part-time employee. It's a loan advance and it's forgiven entirely. It's yours, free and clear. And then you have but it's a total of $15,000 right now, and there will be opportunity to do more. Originally, this EIDL program was for several months of working capital, but the money we had appropriated for this in the last appropriations is not enough to cover everything.
Right.
So the senior leadership of the SBA had to make a decision. There were a lot of people who were first in line. I just saw a report that there were 5 states that have most of these loans because their governors declared the disaster like this.
Right, exactly.
Unfortunately, Virginia and Maryland, I don't know what they were doing, but they took forever.
Mm-hmm.
So they're later in line. So the SBA had to decide, okay, do we just give the original intended loan amounts, several months of working capital, to the people who are first in line and everybody else gets nothing? Or do we try to spread it around and loan everybody the $15,000 with the $10,000 up to $10,000 that's forgiven? All right, they decided to give everybody a little bit. It's not going to be enough for a lot of people, and we know that.
Right.
But we had to choose. We had 2 bad choices.
Right.
So this is what they went with.
And if I can just interject here, the way that this traditional disaster loan program works is that it is the governor of a state that has to formally send a request of a declaration of disaster, which then has to be accepted by the federal government. And it's really the president's office that has to issue the acceptance of it. And then this traditional SBA loan comes into play.
Yes.
And so, as you point out, some states went ahead and did this, but a lot of states were waiting and really didn't understand the implication for this availability. So
I think it was states that are not used to these kinds of disasters. So I'm from California. In California, we're used to earthquakes and fires.
Right.
So our governor was on top of it. There were a couple of Texas. They were on top of. No, Texas was not on top of it because they're not really used to it. There were a couple of other states, all right, where they're very used to it. So that's how it usually happens. So the way this usually happened is there's a tornado somewhere.
Right.
So somewhere in Oklahoma, there's a tornado. And then for one county and surrounding contiguous counties, the governor calls the SBA administrator and says, hey, we got this disaster area. Can we activate the program? They say, yes, sure. And then we get a surge of 10,000 applications. Well, since March 20th, we've had 3 million applications because now every county in the country is designated a disaster area.
Right.
So this is what resulted in the amount of the loan having to come down until we get more money in the big appropriation, in the pot for economic injury disaster loans. And
that is part of the discussion in that second legislation that is being organized right now. So Exactly. Okay, thank you. Go ahead. Interest rates on this disaster loan are 3.75% for small businesses and 2.75% for nonprofits. The terms are up to 30 years, 25, 27, 28, 30 years. It depends on the circumstances of the borrower. And the first payment is due 12 months after the loan is issued. So you don't even have a payment for 12 months. So there's that. It's designed to be easily paid back, and there's no prepayment penalty. Moreover, whatever loan you eventually end up getting, the $15,000 plus whatever else, if you end up not needing all of it, you don't have to use it. You can just pay it back right away. Now, how can you use these EIDL funds? So they're for working capital. They can be used to pay fixed debts, payroll. Notice, see, this existed before the PPP. Accounts payable and other bills that could have been paid had the disaster not occurred. The loan is supposed to help you stay afloat, stay solvent,
and be better prepared to restart operations quickly, right? They're not for business expansion. They're not for buying plant and equipment that you planned on buying this year. They're not to replace profits. It's to pay these bills. So you have a business with, say, payroll. You can get this loan, and you can also get the PPP. Should you use this one for payroll? Well, no, you're going to get the PPP for that. Use this one for the fixed debts, the accounts payable, notes payable, mortgage, if your business is buying the building or land that it's on, etc.
Exactly. So this can be their short-term ongoing business expenses, and then in addition, they will apply for the PPP, which
Yes.
will allow that broader range of first funds and ability to
Yes.
use them. Okay,
Exactly.
thank you very much. Yes.
Now, general loan approval criteria for this. They have to have a credit history acceptable to the SBA. We don't have a fixed number because primarily, let me go to the second thing, this is a cash flow loan. This is a loan that's going to be based on what your cash flow was for 12 months before the emergency. So if you already did your taxes for 2019, we're going to use information from calendar year 2019. If you didn't, they're going to probably ask you in the application, they're going to ask for some information. Actually, they're just going to ask you to put in the information from your income statement and balance sheet. And they may request the information directly, but you can complete the loan with just putting it in yourself. You certify that this is all true and correct. So from that cash flow, we're going to determine that you have the ability to repay the disaster loan. Under normal operations, would your cash flow allow you to repay this loan? As you saw before, it's a pretty generously structured loan, very low interest rate, long term. The payment every month is going to be pretty small.
Right.
The eligibility, well, everybody's eligible now because every county in the United States is a declared disaster area for this. Collateral requirements, there are none. So let me go to the third bullet point first. The SBA will not decline a loan for lack of collateral, but we require borrowers to pledge whatever is available. If you have it, you got to pledge it. But if you don't have it, we're not going to require it.
Right.
There's no collateral at all for loans $25,000 and under. Real estate has collateral when it's available. You have to be willing to have a lien on that. We don't actually care if we're fourth, fifth, or sixth position in a lien.
Right.
You just have to be willing to have a lien on it. So, the last thing is just from our leadership saying the SBA is going to make reasonable efforts to work with applicants toward a favorable decision, right? Because this is very severe. We're gonna figure out a way to do this for you.
Right. Now, David, this system, and I think it's important maybe to make this point, as small business owners get on this traditional SBA disaster loan, your system allows them to begin the application, and then if it asks for something, I think your system keeps that application, and the business owner can come back to it and enter additional information. I point this out only because...
Is this the new streamlined system you're talking about?
Yeah, and the reason because some of them may have experience with this program. They can't expect that the PPP program with the local lenders will operate the same way.
No.
So that's why I asked you in the beginning, small business owners need to get all their information together first before they start processing. So that way, it'll be easier.
And if anyone has an existing disaster loan and they go apply to this one now, they're going to discover that the application process for this one is completely different from the previous one.
Right.
So before March 20th, we had the old way of applying for it. Then that crashed. So then we had a workaround with a Dropbox where you downloaded the paper forms, you filled them out, signed them, uploaded them scanned them into your computer and uploaded them to our website. That lasted a week. And then last week, we got the new system that's been, today's Wednesday. It's been in operation since 2 Mondays ago. So that's when that started. It's very streamlined, much faster. And anybody who has an EIDL already or any other kind of disaster loan already, they're gonna see it's a much different application.
Thank you.
So unlike the 7A and 504 programs, these are not initiated through banks or lenders. These are by the SBA directly. That's why you apply on our website.
Right.
You don't go to a financial institution. You can complete the application right there, or where COVID-19relief.sba.gov, or the one that I gave you, disasterloan.sba.gov.
Mm-hmm.
We have a lot of websites that are slightly different, all pointing to the same page. So, debt relief. This is a big monster of a URL, but you're going to be able to see it on the website. So, this provides immediate relief to small businesses with non-disaster loans. So if you have a 7A, a 504 microloan, for the first 6 months, the SBA will cover all loan payments on these loans, including principal, interest, and fees, for 6 months. So if you already have a 7A loan, remember I said your 7A lender can give you a deferment, but if they don't, the SBA is going to cover all loan payments on these loans, including principal, interest, and fees, for 6 months. This relief will also be available to new borrowers who take out loans by September 27, 2020. The Express Bridge loans. Now, these are loans for businesses that currently have a business relationship with an SBA Express lender.
Okay.
Not all 7A lenders do the SBA Express loan. But if you have an SBA Express loan, well, you know who you are. If you have an SBA Express loan and you're connected to this SBA Express lender, you can get up to $25,000 with less paperwork. You can get it more quickly, and it can be used for short-term funding to bridge a gap while you wait for the loan decision on the EIDL, which is going to take about 30 days.
Okay.
Or you can use it as a term loan. Now, repayment in full or partially via the SBA Economic Injury Disaster Loan Program, that's how it is. You get this bridge loan, then you get the EIDL, you use that to pay this bridge loan. And they can provide this economic support to help you overcome the temporary loss of revenue that you're experiencing right now.
On this program, can I just ask one question?
Sure.
Quick? Are there fewer lenders who are in this category than for potentially the PPP?
Yes.
Okay.
Yes.
All right.
And this is only for someone who already has an Express loan.
Already has it. Okay.
So if you already have a relationship with an Express lender, SBA Express lender, you know who you are, you can access this Express Bridge loan.
Okay.
Loan application support. Okay, our customer service center, phone center is now open 24/7. So call them up. The wait times are very long during the day, so I would say, stay up until 1 in the morning, make your phone call. Or super early. Disaster customer service at sba.gov is the email. Deaf and hard of hearing customers can use that number there. And you can reach out to the SBA's network of resource partners. These are the resource partners that are partially funded by the SBA. I'm going to list them next. It's these. SCORE mentors. So these are retired business owners who volunteer to mentor. The small business development centers. These are the ones in our area here in the DMV. But they have them all over the country. We have SBDCs everywhere. Mm-hmm. The women's business centers, same thing. And the veterans business outreach centers. There are only 22 of those. But if you're a veteran or from a military family, you can go to them. They have business advisors, the 3 centers, and SCORE has the mentors. And they can advise you on the SBA programs. They can advise you, more importantly, suppose you're a small business and you get both loans. You get the EIDL and then you get the PPP. You want to use that cash as wisely, as carefully, as astutely as you can to keep your business solvent. If you've never had to deal with this sort of cash flow emergency, right, it would be good to talk to one of these business advisors.
Right, okay? Right, absolutely. I can underscore that 1,000 times over. It's both what they do and what they tell you, and a key question to ask is, what did you realize you shouldn't have done? And that's a very valuable insight. So I thank you definitely for that.
Now they're going to be overwhelmed. In fact, I know, one of the guys I know well, and the one in Leesburg, they're overwhelmed. So they used to work on one-on-one. Call them up, make an appointment. You can talk by phone. You could go meet them in person. Now they're doing a lot of these webinars like this.
Mm-hmm.
So they're saying, okay, if you're a business owner and you want to figure out what to do here, we're going to do a webinar because they just don't have enough people to do.
Right. No,
one-on-one
absolutely. Absolutely.
Okay. So other communications here. Here's the announcements. Like I said, sign up to receive the email announcements here, www.sba.gov/updates. And you can go there. If you go to our SBA website, up at the top, there's a yellow banner. This is just sba.gov, the homepage. And there's also a Learn More red button for coronavirus relief stuff. So you can just go in there and start reading through the different programs. So I'll give you a clue. It says coronavirus funding options. That's we keep asking them to change that because that's SBA talk. Funding options is SBA speak for loans.
Right.
Right? We keep telling them, change. The general public doesn't talk the way we do, right? So when you see funding options, that's SBA language for loans. Click on that, then you'll find out about the loan programs.
Okay.
All right. Okay, that's it for now. That's all I have.
Well, David, this has been terrific. And I think the takeaways definitely, number one, as small business people, get to these online resources. Certainly inform yourself as fully possible. Understand that you will have to constantly go back to make sure what changes have been made. I know for small business that's very frustrating, but nobody could have anticipated this size of a need. The fact that the federal government responded so quickly is terrific. Banks are struggling. That is absolutely a fact in trying to deal with the onslaught that has come to them. You know, banks are not used to dealing with 1 million applications all at once. So certainly in these first 3 weeks, things are going to be a little bit up and down. Please have patience. Make sure when you go to utilize these benefits, you have all your information ready. Don't be there and go, oh, I forgot the payroll stuff. Oh, I forgot my tax information. Oh, I forgot. You can't do that with this. You have to be prepared. Understand your definitions. And I think, David, you've done a great job with that.
Absolutely.
Yeah, who was a Boy Scout?
Yes, that's right.
Is it the Cub Scout or the Boy Scouts?
I was a Girl Scout and I got to Rainbow Bar, which is
there we go.
Of Eagle Scouts.
Always be prepared. Always be prepared.
Always be prepared.
Dave Borowski, are there any additional questions that you had that came to mind?
No, I think it was a very comprehensive presentation. Thank you.
Let me add just one last little thing to it.
Absolutely.
Now, I've been getting questions about this, like, well, what if I take the PPP, but what if I don't open up for 8 weeks because I have to, what people aren't getting is the PPP is to pay people while you're not open.
Correct.
The whole point is if your business is shut down, to pay people to stay home. That's what it's for. Now, if your business is not completely shut down, maybe you're at half staff.
Mm-hmm.
So I know some businesses, what they're doing is, okay, we got 8 employees. So we're gonna take turns. This week, 4 of you are on and 4 of you are off. So this is so you can pay everybody, the ones who are on and the ones who are off. So you can keep them home while your revenues are reduced. So you can keep them on the payroll so that when everything opens up completely, you can restart normal operations easily without having to go out and hire people, train them or whatever. You have them. Right? Just keep them on the staff for those 8 weeks, even if they're at home. Now, you don't have to pay the full salary. I'm not saying what you ought to do. I'm giving you ideas about how you can use this wisely because remember, you can use 25% for non-payroll costs. And maybe you don't have enough money to meet your non-payroll costs. Even with the EIDL, as you saw, it's small, it's 15,000.
Right.
So what you could do is say, okay, I'm not going to lay you off, but I'm going to pay you 85% of your normal wage or salary.
Right.
Fine. Then you got some money left over from the PPP to use for those utilities and rent and everything like that to keep you solvent. And you stay under the 25% threshold for non-payroll costs, and then you get the loan completely forgiven. But at least your employees are getting 80 or 85% of their normal wage, which I'm sure most of them would rather have than be laid off and go to unemployment benefits.
Sure.
So this is going to require of you business owners a bit of arithmetic, right? Like sit down and do a little bit of arithmetic to find the best way to use this cash to stay solvent and keep your people employed.
Correct. And I'm glad you brought up the rotating of staff. One thing that happens, and this is really a disaster. I mean, it isn't a hurricane, it's an epidemic, and so maybe that's a little different, but it is a disaster circumstance. And it is elongating. You will burn, if you pick the top 4 people and they are the ones, you will burn them out.
Yes.
Because they've got other things to do. So definitely rotating staff is really critical to keeping a viable and healthy staff, and also giving them time to deal with what they have to deal with at home.
Right.
So that's a wonderful, wonderful, and thank you for those suggestions. Well, I just want to say thank you to everybody, and this is part 1 of what will be at least a 2-part, I hope not a 3-part series, but if it's necessary, it will be there, from District 7610 on small business and the pressures that they're under. Our program 2 is going to be, yes, April 30th, in which we will have a representative from the U.S. Chamber of Commerce Small Business Division that will also be talking about some of the realities out there. And we wanted to bring these programs to you timed this way so that, you know, things, new things arise. We'll be able to report that to you, and additionally to give some time, as David has made clear to us, how things need to sort of get through the process. With that, again, David, thank you so much. Thank you, Rich. Thank you, Dave Borowski. And thank you to all our Rotarians. This is for you. And make sure your small and mid-sized and independent contractor people know about this as well in your communities. Thank you very much.
Great.
Have a great day.
Good luck to everyone.
Thank
Bye-bye.
Bye.
Okay. Yay!